Welcome, everyone. Today, we are beginning our SS1 accounting series. This is first term, Topic 1, Introduction to Accounting. This is the foundation of all your accounting studies. You must understand these basic concepts well. They will be used throughout your accounting journey. Pay close attention. Let us begin. First, let me explain what accounting is. Accounting is the process of identifying, recording, measuring, classifying, summarizing, and communicating financial information. This information is used for decision-making. Accounting is often called the language of business. It is the system that tracks the financial activities of a business. It provides information to owners, managers, investors, and other stakeholders. Without accounting, businesses would not know if they are making a profit or a loss. They would not know what they own or what they owe. Understanding accounting is essential for anyone who wants to run a business or work in finance. Let us now examine the definition of accounting in more detail. Now, let me explain the definition of accounting. The American Institute of Certified Public Accountants defines accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are, in part at least, of a financial character, and interpreting the results thereof. This definition has several key parts. First, accounting is an art. It requires skill and judgment. Second, it involves recording. This is the process of entering transactions into the books. Third, it involves classifying. This is grouping similar items together. Fourth, it involves summarizing. This is presenting the information in a useful format. Fifth, it is in terms of money. All transactions are expressed in monetary units. Sixth, it involves interpreting the results. This means analyzing the information to make decisions. Understanding this definition is essential for understanding the scope of accounting. This is a key concept. Now let me explain the purpose of accounting. The main purpose of accounting is to provide financial information that is useful for decision-making. This information helps users to make informed economic decisions. Accounting helps businesses to determine their profitability. It shows whether a business is making a profit or a loss. It helps businesses to determine their financial position. It shows what a business owns and what it owes. It helps businesses to manage their cash flow. It shows how much cash is coming in and going out. It helps businesses to plan for the future. It provides information for budgeting and forecasting. It helps businesses to comply with legal requirements. It ensures that businesses pay the correct taxes. Understanding the purpose of accounting is essential for understanding why accounting is important. This is a key concept. Now let me explain the functions of accounting. Accounting performs several important functions. The first function is record keeping. Accounting records all financial transactions in a systematic manner. This ensures that all transactions are documented. The second function is communication. Accounting communicates financial information to users. This information is presented in financial statements. The third function is analysis. Accounting analyzes financial data to identify trends and patterns. This helps in decision-making. The fourth function is interpretation. Accounting interprets financial information to make it understandable. This involves explaining what the numbers mean. The fifth function is compliance. Accounting ensures that businesses comply with financial regulations. This includes tax laws and accounting standards. The sixth function is protection. Accounting protects business assets. It helps to prevent fraud and theft. Understanding the functions of accounting is essential for understanding the role of accounting in business. This is frequently tested. Now let me explain the users of accounting information. Accounting information is used by many different groups. The first group is owners. Owners use accounting information to assess the performance of their business. They want to know if they are making a profit. The second group is managers. Managers use accounting information to make decisions. They use it to plan and control operations. The third group is investors. Investors use accounting information to decide whether to invest in a business. They want to know the financial health of the business. The fourth group is creditors. Creditors use accounting information to decide whether to lend money to a business. They want to know if the business can repay its debts. The fifth group is the government. The government uses accounting information to assess taxes. They also use it for regulatory purposes. The sixth group is employees. Employees use accounting information to negotiate wages. They want to know if the business can afford to pay them. The seventh group is the public. The public uses accounting information to understand the impact of a business on the community. Understanding the users of accounting information is essential for understanding who benefits from accounting. This is frequently tested. Now let me explain the branches of accounting. Accounting has several branches. The first branch is financial accounting. This is the branch that prepares financial statements. These statements are for external users. Examples include the balance sheet and the income statement. The second branch is management accounting. This is the branch that provides information for internal users. It is used for planning and decision-making. The third branch is cost accounting. This is the branch that determines the cost of products and services. It is used for pricing and cost control. The fourth branch is auditing. This is the branch that examines financial records. It ensures that they are accurate and reliable. The fifth branch is tax accounting. This is the branch that deals with tax matters. It ensures compliance with tax laws. The sixth branch is forensic accounting. This is the branch that investigates financial fraud. It is used in legal proceedings. Understanding the branches of accounting is essential for understanding the scope of the accounting profession. This is a key concept. Now, let me explain the history of accounting. Accounting has a long and rich history. The earliest records of accounting date back thousands of years. Ancient civilizations used accounting to track agricultural production and trade. The first major development in accounting was the double entry system. This system was developed in Italy during the Renaissance. Luca Pacioli is known as the father of accounting. He published the first book on double-entry bookkeeping in 1494. The double-entry system revolutionized accounting. It provided a systematic way to record transactions. Over the centuries, accounting has continued to develop. The Industrial Revolution created the need for more advanced accounting. The 20th century saw the development of accounting standards. Today, accounting is a global profession. It is essential for modern business. Understanding the history of accounting is essential for understanding the evolution of the profession. This is an interesting topic. Now let me explain the accounting profession. The accounting profession is a respected and important profession. Accountants are professionals who provide financial services. They work in many different areas. Public accountants work for accounting firms. They provide services to clients. Management accountants work within organizations. They provide internal financial information. Government accountants work for government agencies. They manage public funds. Forensic accountants investigate financial crimes. To become an accountant, you need to study accounting. You also need to pass professional examinations. The most recognized accounting qualifications include the Institute of Chartered Accountants and the Association of Chartered Certified Accountants. In Nigeria, the Institute of Chartered Accountants of Nigeria is the main professional body. Understanding the accounting profession is essential for understanding career opportunities in accounting. This is a key topic. Now, let me explain the difference between accounting and bookkeeping. Many people confuse accounting with bookkeeping. Let me clarify the difference. Bookkeeping is the process of recording financial transactions. It is the first step in the accounting process. Bookkeepers record transactions in the books of original entry. They perform routine tasks. Accounting is a broader field. It includes bookkeeping. It also includes analyzing, interpreting, and communicating financial information. Accountants use the information provided by bookkeepers. They prepare financial statements. They provide advice and make decisions. Bookkeeping is a part of accounting. Accounting is the complete process. Understanding this difference is essential for understanding the roles of bookkeepers and accountants. This is frequently tested. Now let me explain the accounting equation. The accounting equation is the foundation of double-entry bookkeeping. It states that assets equal liabilities plus owner's equity. The formula is assets equals liabilities plus owner's equity. Assets are the resources owned by a business. Examples include cash, inventory, and equipment. Liabilities are the debts owed by a business. Examples include loans and accounts payable. Owner's equity is the owner's claim on the assets. It is the difference between assets and liabilities. The accounting equation must always balance. Every transaction affects the equation. Understanding the accounting equation is essential for understanding double-entry bookkeeping. This is the most important concept in accounting. Now, let me explain the accounting cycle. The accounting cycle is the process of recording and processing financial transactions. It is a series of steps. The first step is identifying transactions. The second step is recording transactions in the books of original entry. The third step is posting to the ledger. The fourth step is preparing a trial balance. The fifth step is making adjusting entries. The sixth step is preparing financial statements. The seventh step is closing temporary accounts. The eighth step is preparing a post-closing trial balance. The accounting cycle repeats every accounting period. Understanding the accounting cycle is essential for understanding the flow of accounting information. This is a key concept. Now let me explain the qualities of good accounting information. Good accounting information should have certain qualities. The first quality is relevance. The information must be useful for decision-making. The second quality is reliability. The information must be accurate and trustworthy. The third quality is comparability. The information must be comparable over time and across businesses. The fourth quality is understandability. The information must be clear and easy to understand. The fifth quality is timeliness. The information must be available when it is needed. The sixth quality is completeness. The information must include all necessary details. Understanding the qualities of good accounting information is essential for preparing useful financial reports. This is a key concept. Now, let me give you sample exam questions to prepare you for your test. Define accounting. Accounting is the process of identifying, recording, measuring, classifying, summarizing, and communicating financial information. State the purpose of accounting. The purpose of accounting is to provide financial information that is useful for decision-making. List the users of accounting information: owners, managers, investors, creditors, government, employees, and the public. State the accounting equation: assets equals liabilities plus owner's equity. Explain the difference between accounting and bookkeeping. Bookkeeping is the recording of transactions. Accounting includes recording, analyzing, interpreting, and communicating. List the branches of accounting: financial accounting, management accounting, cost accounting, auditing, tax accounting, and forensic accounting. State the qualities of good accounting information: relevance, reliability, comparability, understandability, timeliness, and completeness. Let me summarize everything we have covered today. Accounting is the process of recording, classifying, summarizing, and communicating financial information. The purpose of accounting is to provide information for decision-making. The functions of accounting include record-keeping, communication, analysis, interpretation, compliance, and protection. The users of accounting information include owners, managers, investors, creditors, government, employees, and the public. The branches of accounting include financial accounting, management accounting, cost accounting, auditing, tax accounting, and forensic accounting. The accounting equation is assets equals liabilities plus owner's equity. The accounting cycle is the process of recording transactions. Good accounting information is relevant, reliable, comparable, understandable, timely, and complete. Understanding accounting is essential for business and finance. This is Topic 1 in your SS1 Accounting First Term series. Study it well. It is the foundation of all your accounting studies. Well done.